Tether reaches a record market capitalization, and the crypto ecosystem continues to gain strength with growing institutional interest. Giants like BlackRock and Morgan Stanley are showing confidence in Bitcoin and cryptocurrency ETFs. Are we at the doorstep of a new bull market?
Tether's stablecoin USDT surpassed for the first time the impressive mark of $120 billion in market capitalization. This milestone is a key indicator of the growing demand for stablecoins, which act as a bridge between fiat money and cryptocurrencies. The record market cap of USDT not only highlights Tether's robustness as the largest stablecoin in the world, but it could also signal an upcoming bullish rally in the crypto market. The increase in USDT supply is often seen as a sign that investors are accumulating stablecoins before re-entering the cryptocurrency market, suggesting a possible wave of buying. This isn't the first time a rise in USDT supply has boosted the market. In August, Tether minted $1.3 billion in USDT in just 5 days after Bitcoin hit a 5-month low above $49,500. In a matter of days, this increase in stablecoin supply helped Bitcoin recover by over 21%, reaching prices above $60,000. This suggests that a larger supply of USDT can be a precursor to future rises in cryptocurrency prices. The role of stablecoins like USDT is fundamental in the crypto ecosystem. By providing a digital asset linked to the value of fiat currency, they allow investors to move quickly between crypto positions without leaving the digital space. This gives them flexibility and a hedge against volatility. As USDT's market cap grows, its influence on the crypto market also amplifies, creating favorable conditions for a potential digital asset rally. We could start thinking, why not? This record in USDT's market capitalization surpassing $120 billion may be giving us a clear sign of the strength of the stablecoin market, and who knows, it could mark a new chapter in the crypto market. Now, we'll have to see if the pattern we mentioned from August repeats itself.
Open interest is a key indicator in futures markets, reflecting the total number of contracts that remain open and unsettled. In simple terms, it measures the number of active contracts and is a fundamental barometer for assessing activity and participation in these markets. An increase in open interest suggests that more investors are entering the market or that existing players are expanding their positions, indicating heightened activity in futures contract trading. In the case of Bitcoin, open interest has become a particularly relevant measure, as the futures market allows investors to speculate on the future price of this cryptocurrency or hedge against its volatility. When open interest in Bitcoin futures rises, as it has recently, it's a sign that investors are more interested in trading these derivatives, which can lead to significant market movements. Additionally, a sustained increase in open interest often signals greater volatility ahead, as more open contracts could trigger liquidations, causing Bitcoin's price to fluctuate sharply. A clear example of this trend is the 36% rise in open interest in Bitcoin futures on the Chicago Mercantile Exchange over the past few weeks, reaching $12.26 billion. This increase, surpassing the previous record set in April, highlights the acceleration of activity in the Bitcoin futures market. This growth in open interest suggests that investors are strategically positioning themselves, anticipating potential price shifts in Bitcoin driven by factors such as ETF approvals, new regulatory frameworks, or broader adoption of cryptocurrencies by institutions. The CMA, one of the world's largest and most regulated derivatives exchanges, has played a key role in institutional adoption of Bitcoin. The high levels of open interest in its futures underline the growing participation of hedge funds, asset managers, and other professional investors. These institutions value the secure, regulated environment of the CME, which allows them to access the Bitcoin futures market with confidence, managing their exposure to risk in a more controlled way compared to other less regulated markets. Now, take a look at the yellow line. This represents the price of Bitcoin, and the green histogram is the open interest. Notice that we are currently at an all-time high in open interest. There have never been this many open positions in Bitcoin's history. Another clear observation is that open interest has an extreme correlation with price movement. Notice how, when the price rises here, open interest follows suit, and when Bitcoin drops, open interest does the same. And we can see this sequence repeated constantly in the evolution of Bitcoin's price. It's a true reflection of how retail investors are sensitive to Bitcoin's price movement. After all, when the price shoots up, the average retail investor gets excited and starts opening positions like crazy, which is normal. That's what we call FOMO. But another observation is that while it's true that we haven't reached a new all-time high in Bitcoin's price, we have done so in open interest. And this is where everyone starts asking the question: are we in the classic situation where open interest is rising sharply because institutions expect Bitcoin's price to climb? Now tell me, do you think we're at the start of a new bull market, or are we at a peak that will lead to the market crashing? Leave your opinion in the comments. giants. And now, we're going to explain how BlackRock's Bitcoin ETF is attracting major and important investments and how that could impact Bitcoin's price. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
The cryptocurrency market continues to experience fluctuations, and Bitcoin has been no exception. However, this correction hasn't dampened the growing interest in the iShares Bitcoin Trust and BlackRock's Bitcoin ETF. In just one day, this fund saw inflows of $329 million, highlighting institutional investors' confidence in Bitcoin. This ETF has gained popularity among institutional and retail investors by offering a safer and less technical option than directly buying Bitcoin. Since its launch, the fund has accumulated $26.5 million. And right now, BlackRock's Bitcoin market is in a state of urgency. Since its launch, the fund has accumulated $26.5 billion in assets under management, establishing itself as one of the most successful ETFs of the year. What's most notable about the IBIT is its ability to attract large sums of capital even during market corrections in the crypto space. While other funds have seen capital outflows, the IBIT has maintained its dominant position, attracting more than $1 billion in inflows in 2024. This phenomenon underscores investors' interest in Bitcoin through regulated financial products like ETFs. Despite recent drops in Bitcoin's price, the $329 million inflow in a single day into the IBIT reflects a long-term investment strategy. Many investors see market corrections as opportunities to acquire assets at lower prices, anticipating that the crypto market will stabilize in the future. This long-term approach is typical of institutional investors who aim to capitalize on future gains in the cryptocurrency market. While other Bitcoin ETFs, like those from Bitwise and Grayscale, have experienced capital outflows during the same period, BlackRock's IBIT remains the undisputed leader in the spot Bitcoin ETF market. Its success not only demonstrates growing interest from major investors, but also highlights the importance of regulated products in the expanding world of cryptocurrencies. The commitment of giants like BlackRock to the crypto space provides confidence in these currencies and points to a future that many believe will be very promising.
In one of the most notable acquisitions in the crypto market, BlackRock purchased over $680 million in Bitcoin in just 2 days. These purchases strengthen their position in the IBIT Bitcoin ETF, which has been one of the most successful in the market, surpassing $10 billion in assets under management. This series of acquisitions reflects Bitcoin's growing importance in BlackRock's investment strategy, seeing the cryptocurrency as a fundamental asset class for the future. Details of the purchases show that BlackRock made its first acquisition on October 15, investing more than $294 million in Bitcoin. The following day, the firm doubled down with an additional $390 million purchase. These acquisitions not only demonstrate BlackRock's continued interest in Bitcoin, but also position the asset management giant as one of the largest holders of this cryptocurrency, even rivaling platforms like Binance. BlackRock's CEO Larry Fink has been an outspoken advocate of Bitcoin, describing it as an independent asset class. This strategic vision is shared by other executives at the firm, such as Jay Jacobs, head of thematics and active ETFs in the US, who predicted that the Bitcoin market could reach $30 trillion in the coming years. This growing institutional confidence in Bitcoin further legitimizes it in traditional financial markets. BlackRock's IBIT ETF has been a key factor in increasing the firm's exposure to Bitcoin. IBIT, a Bitcoin spot ETF, has proven to be extremely successful, with over $25 billion in assets under management this month. Its strong performance and increasing capital inflows position it as a leader in the cryptocurrency ETF market. On October 19, IBIT saw an inflow of $309 million, the highest among all Bitcoin spot ETFs, reflecting the growing interest from investors. With this massive Bitcoin purchase, BlackRock continues to solidify its position in the crypto ecosystem. As IBIT keeps bringing in capital, the firm will need to hold an increasing amount of Bitcoin to support its product. These purchases not only strengthen the ETF, but also show that BlackRock is poised to lead the institutional adoption of Bitcoin in the near future.
Morgan Stanley has revealed a $272 million investment in Bitcoin ETF. ETFs, reinforcing its role in the growing institutional adoption of cryptocurrencies. This move highlights how traditional financial institutions are increasing their exposure to Bitcoin as part of portfolio diversification strategies. Morgan Stanley's decision reflects a broader trend within the financial industry, where more and more TradFi firms or traditional finance institutions are exploring digital assets to manage risk and capitalize on their growth potential. Morgan Stanley's Bitcoin ETF investment is significant. While it represents a small percentage of its total portfolio of $1.2 trillion in assets under management, the figure underscores the growing confidence in cryptocurrencies among large financial institutions. The investment was reported in a regulatory filing with the U.S. Securities and Exchange Commission (SEC), confirming that Morgan Stanley is joining other institutions that have also increased their exposure to Bitcoin. Morgan's investment comes amid a rising interest in Bitcoin ETFs. Firms like Goldman Sachs and DRW Capital have also revealed substantial holdings in Bitcoin and Ethereum ETFs. Goldman Sachs, for instance, holds $410 million in these assets, spread across products like BlackRock's Abbott and Fidelity's FBTC. This growing interest suggests that Bitcoin ETFs are becoming a key option for institutional investors seeking exposure to the crypto market without having to directly buy digital assets. Morgan Stanley's increasing participation in the cryptocurrency market is nothing new. Back in 2021, the investment bank had already requested authorization to invest in digital assets, and since then, it has expanded its involvement in products like the Grayscale Bitcoin Trust GBTCC. With this new investment in ETFs, it reaffirms its commitment to Bitcoin, marking a new milestone in the acceptance of cryptocurrencies as a legitimate asset class. Institutional investment in Bitcoin-related products could have a significant impact on the value of the cryptocurrency. If more financial institutions allocate even a small portion of their capital to Bitcoin, this could create greater demand and drive its price up. For this reason, we believe that the growing interest in Bitcoin ETFs and the recent record inflows into these funds suggest that Bitcoin, the pioneering cryptocurrency, could see a price increase in the very short term. If you enjoyed this market analysis, let me know in the comments. Also, give the video a like, subscribe to the channel, and click on the notification bell so you don't miss future analyses. Be sure to share this video with your friends and other trading and cryptocurrency communities so more people can continue to grow in their trading strategies. Good luck with your positions, and see you next time.